So this is where we came prior, as in 10 minutes back when we were talking. All right.
Yeah,
So you
yeah,
intend to go short below 91.30 based on something like this, correct?
yeah. Maybe probably at the break of the trend line.
Down here. All right.
Yeah,
And
if it,
you intend to go for 15 to 20 pips on your
yeah,
profit.
yeah. If the trend, if it's old, if price hold below the trend line,
All right.
I
Good.
would look to do that.
All right. Now, uh, I'll show you a few things, and then then I will explain that out. Now, if you can mix a certain pattern towards what we're seeing here, let's say if I do things a little bit differently, right? I take this out, all right, and see if I can do something. I think there's a breakout between these two lines here, right? And
Hmm.
let's say if we do this, you see what I mean?
Yep,
So it seems like we have a symmetrical triangle out here, and it's already broken.
yep,
And we
yep.
already had a small retest and coming down. So I think I can probably do this also. How would this come? Yeah, from this angle also almost the same thing. That it's done. But of course, this one looks better. This one looks better. Okay, now there is nothing wrong with this, and something I want to share because I see this again and again so many times. Let's say we had a break here,
Yep.
so price was underneath, then we broke, right? We ignoring this spike, so it's a declining trend line out here. Match it
Yep.
up with this one, we have a break, and the price is holding accordingly to it. But what I've seen is that what if I do this? What if I put a trend line here? Do you see anything different here? Let's say I take this off and I take this off. Do you see anything different out here? Does this tell you anything?
It's different.
What is the difference out here? Any idea?
Because like price is going to go like we can enter buy
Out here?
down at this
Base trend line? Hello? Hello?
hello.
Yeah. Everything okay?
Yes, but at a point I wasn't hearing you clearly. Maybe the network was bad.
Okay. I was explaining. Do you see the what I want to emphasize out here is that you know normally we've already put in that price broke higher to here, right?
Yep.
And even the breakpoint here, let's say the high has been 91.06, sorry, 91.0203, something like that. So
Hmm.
when you have a formation that you had a break and swift move on the higher side and formation like that, does not this constitute a bull flag?
You said does not it constitute a what?
A bull flag.
Yeah, because price has shifted. There was a big breakout at somewhere behind that.
Yeah.
and price is trying to form a bull. Yeah, yeah,
Yeah.
that's true.
So if, let's say, we make use of a formation, then we can probably do something like this. Hold on. That, it can hit probably here, and if it starts bouncing from 91.10, 91, let's say 91.07, 91.10, then this is more likely to be taken down as a bull flag, and we can probably end up doing something like this,
Yeah.
and testing it, then probably coming lower, and then being a bull flag, break it, and probably get a new high, something like this. If we just go and match a trend line here, somewhere around 90, 92.25, 92.30, something like that.
Mm-hmm.
Hit here, and then so it could be a continuation of the break that it is most likely here to stay, and then we can carry on. That would be fair
Yep.
to assume, right? I'm not saying it will do like that. I'm just saying
But
that
those are what we should expect. We should
if
do one.
if this is a bull flag,
Yeah.
for it to be bull flag, it needs to, I would say,
Retest.
it need to hold somewhere around this zone.
Okay.
It needs to hold somewhere around this zone. Let's say 91 to 91.10. It needs to hold. So a good characteristic would be it drops on here, and a healthy thing would be to be seen is that if the bounce is healthy, that's mean it carries on. So basically what we require is that continuation of dollar yen to continue on the long side. That would be fair to assume. So we cancel that. So this is, you can still do what you considering doing it to sell the break. There's nothing wrong with that, right? You can do it for a short-term purpose, but when it comes down to maybe 91.10, 90, close to 91.10, you need to start, you need to be careful, because either you need a break under for it to probably then fall down probably towards 90.40, 90.50. You should do that. Otherwise, if it starts bouncing up from here, then you need the caution. You need to take caution that can probably being a bull flag, it can head and probably break it and go higher. An actual trend line here would be something like this. Can probably use this and combine it here. So that's mean if I want to continue forward on the same analysis, that's mean we can break on the lower side, but if a bounce high here comes in, and if it's a strong bounce, then it should be taken down as a bull flag. And with the mindset that the price can hit back to this trend line, maybe swing a little bit and then break it and head down for minor new high. So it can post like 92.21, 22 high, maybe it can do 92.25, 92.30. But then again, this is a good looking resistance point, and from here we can sell again on a test high. Here we can sell again to hopefully come back down towards this portion. So that could be a trade setup. And again, the whole concept is that while if this thing was not there, then you sell it. And from that sell probably would be towards this peak, or I would say about 90.40, 90.50 would be a good target on the sell on the break. But if you have a formation that's coming in, a pattern that's kicking in, then it's always advisable to pay attention to it, right? That because what I've seen over and over again is that patterns and formation, they actually prevail over plain simple resistance or support. So they have an edge over support and resistance. So the only way for you to continue lower would be it to actually, let's say, break under 9100 and starts holding this trend line out here, on any retraces, then you know you can take it down to 90-40, 90-50 as your initial decent target before maybe come down into swings or continuation on the lower part. So this actually helps, if you put a pattern, if you put a formation to your support and resistance, not only you get a better support and resistance, but you also get, you get a whole setup for a trade to pair. You know what I mean? It's like, as again, I repeat, from here under is most likely a break. But if it starts holding here, then you know that might be onto a formation of bull flag, and there's a chance that, especially if the price starts breaking back higher above this and start closing, then it's going to come and it's going to hit that, maybe swing it, and then eventually it being a bull flag will break it, and you will be seeing a new high. Not maybe today, maybe tomorrow, because this pair relatively is quite slow in in its motion. But again, when it comes down hitting out here, today, tomorrow, it could be taken down as a decent resistance, or you can sell back and probably get a retrace down to where it broke from. Maybe, come tomorrow, maybe 91.40, 91.50, whatever the numbers are, regardless of that. So let's say if you can do the same chart on any other time frame and, just try to get more confirmation, because apparently what we're doing right now is only a 30 minutes time frame. So if I can find Aussie yen here and put it down on, let's say, 2 hours, we'll try to see what we can see out here. Again, this is plain simple, right? That this is done, and what we were doing earlier was probably this trend line here. So if you're looking from this angle, then it's already been hitting support, while the 30 minutes is showing a little bit on the lower side. The 2 hours is coming down on 91.33, 91.34. In short, it's suggesting that either, if it's a strong move to continue on the higher side, then, probably end up holding 91.30 and just taking it,
Sorry,
break.
can I ask you quick? What charting platform is this that you're using?
What I'm using, it's
Yeah, the chart.
this is similar to NetDania.
Is it NetDania?
NetDania. Well, NetDania, I'm using power charts, but it's the same thing as NetDania. So most of the people they know about NetDania charts. So this is what I've been using for the last since the beginning. So about, I would say, 12, 13 years. So I'm happy with that.
Yeah.
So this is the different aspect. But then how would you do? I don't think so. We can get a proper bull flag formation unless, actually it does. It's almost the same thing. So what are the levels that are coming here? It's the same thing, 91.09, 91.0, maybe as low as 91.06. If it drags on and on, halfway into the American session, you can see that. But apparently you get a break, you hit back here. When it starts holding here, you need to be cautious, because it can break on the higher side, which means we could be looking at this angle. So it's the same concept what we did on the 30 minutes. So 2 hours almost confirms it, just that the break of 25, 26 is higher on the 2 hours towards 33. So, but the concept why it's the same, it's showing a distinct pattern. So a formation of a bull flag. So once you start holding above 9100, if it comes testing it, then the possibility increases that we are indeed onto a bull flag, and then there's a likely continuation of the long side, and we hit my new high 92, 20, 30, whatever, and then eventually I would expect it to retrace. If it hits that, if it gets done, or if it gets to play out the way we are expecting, when it comes down here, you got a short-term trade setup where you can take a shot and you can bring it down towards what are the numbers that is for by the time it comes testing it, and then depending on the bounces, you can buy back again. So this what again trend line is, and why am I picking those trend line is let's just say we discuss each and every trend line one by one.
Okay.
This is basically topping out, formation of resistance. I am ignoring the spike. Again, it came down on the Aussie news. I'm ignoring this spike, and it came. It was a fake spike anyways, because the reaction is strong out here. It just covered back fully, and hitting it, turning out to be a bearish candle. So this trend line still stays. It is linear. There is I'm ignoring this because purely news based. I'm ignoring. So that's mean we can expect another test out here, right? Will it come right now or will it come after dropping in? I would prefer this test comes in once we test somewhere close to 91.05, 91.07, 91.08, numbers like those, and then get a bounce. So you got a small trade setup out here, right? And how would I know that if it tests out here that this is a good trade? Because we have a small breakout point out here. If it starts closing above, then it'll just gonna fortify, or I'll be more sure that the long side will prevail, because I've based my trade on a pattern. So we'll expect a break on the higher side, swing back here, and then hit highs towards here, and then sell. So this is my first initial trend line, and why I think it's important. My second trend line is nothing more than it's nothing more than the tops or the resistance that was forming out here till it basically broke here, right? So
Yeah.
so this is, again, this is streamlined. This is nothing more. This is as simple as 1 2 3 playing out. All right, my third trend line is just connecting two lows in formation of my T1, because I can see it forming pattern for a bull flag, right? And it's plain simple. So to me, this does not really matter too much. Apart from this matters to me. So if I have to trade it, I'll look for a reaction here. If I see it holding, I would like to go for a buy, get it initial close on 2 hours higher than this, and then wait for a test. Bank profit most of my chips, look for a small retrace, and maybe try to get back or add back into it again, and wait for a break on the higher side and take it towards here. Bank everything here, go for a retrace, see if I can come down on maximum retrace, and just cash my chips. And unless I get a strong bounce or a strong feeling that it's going to continue, I'll take it long. But this has been a slow pair. Maybe if I can take a buy, bring it out here, sell some, and if lucky, bring it down here, that's more than enough for me.
Sorry,
And
can I ask you something like this? This is Audi Japanese yen.
yes,
Yeah. Does this pair, does it correlate with other Audi pairs?
very much actually, right. If first of all, odd and Japanese yen, they both are pairs for the Asia, so they actually move they can move a lot, because you have news event coming up for the pairs, which you can see Aussie had a new and it impacted on that. And relatively, this pair is a slow pair. One of the reason being Aussie is not known for too wild of a moves or too big of a span in terms of trading spectrum. Same thing is the case with the dollar yen. It does not actually move too much, and that's one of the reasons that this pair does not not like pound yen, not like pound Aussie, not like euro yen, not like euro Aussie, or even Canadian yen or Canadian Aussie. This pair is relatively slow. The ranges are slow, so compared to other crosses on yen and Aussie, you can say that this is a dull pair. This could be an active, very active pair. Let's say you have a news on Australian dollar, which is positive, right? And at the same time, you have a news on the dollar yen, which is negative. So that's the time when you can see that this pair can move a huge distance and can literally do about 200 250 pips. But you need to have a very strong news event going on Australian, favoring Australian, and on yen, weakening yen, or vice versa. That's when you see some really big moves. Otherwise, relatively compared to the other crosses on yen and Australian dollar, this is a slower pair. This is a slower pair. It does not actually move the way the others move. But that's beside the point. When you're talking about formation, when you're talking about trend line, regardless of the pair that you're trading, the concept is the same. The concept is the same. It's just that if this was a pound, yen, or some other more volatile pair, then when you see a support like that, you can see a you can see a brief, or sorry, you can see some spike that can probably extend 15, 20 pips, 25 pips before it corrects and ends up closing on the higher side. But on a pair like this, you will not see too much of wild spikes. Maybe you'll see 5 pips, 6 pips. I would say 8 to 10 pips max, right? But you will not see wild spikes like 15, 20, 25 pips and still end up closing within the spectrum that you're looking for and continue within your direction. So it does matter, so discussion out here right now is the pick of a trend line, and the last one being the T4 right here. It's nothing more than trying to connect those 2 pips, and the first thing that I've come across is this. I could have very well taken this also, but again, maybe I can take this because this looks more proportional between here and there, and I bet if I use this, it will look even more proportional. See, when I look, see, think of this in these terms. T1. Actually, let me color them different, so it's easy to understand. Beside the formation, the red constitute a bear channel, correct? The blue constitute a blue channel, but formation wise, from where we are, the reds constitute a bull flag. You see the difference? You have a channel, but then you have a formation and you have a channel at the same time. So you're mixing them up, and you're mixing them up because you have a breakpoint here. You're relying on the breakpoint, even to an extent that let's say if we can do this, maybe from here. That you can ignore this and you can use this as your breakpoint. It depends how you're looking into a pair, and depends on how you go about trading the pair. But for argument's sake, I'll keep this intact because this is what I originally had when we started discussing yesterday. So we'll keep it like that. And here it's more meaningful to me because within this channel, this trend line is what we can call the midpoint, or is the point where it can shape the price to the lower side, and being on the higher side shape the price to be on the higher side. So it makes more use to me this way, and all I'm doing is nothing more than making my trend line worse. And let me tell you a secret about trend line. What exactly is trend line analysis? It is nothing more than you plotting lines onto your charts, and those lines, they speak back to you. And how they're speaking back to you, they are hinting you what the price is about to do. Since everything to do that what we consider that we do in terms of technical analysis is price action, so best way to dissect the price action is by your trend lines, allowing the price to travel either to the north side or either to the short side. Regardless of how they travel, it's a different story, whether they do it in 5 minutes or they do it in 10 hours or 20 hours. Regardless of that, it's the path that the trend line shows you. So it would be correct for me to say the trend line does nothing but tells you a story. It tells you a story of the price, where it intends to go, or how it would go, the obstacle that it will come across, and how it will take care of those obstacles. Will it get some help by the friends being the news, or will it get more distracted by foes and enemies that again being the news? If the news on the pair helps it, then it's helping as a friend. If it's not helping, then it's acting in as an enemy. So it's all storytelling. It's all about how you see the market and how you sketch it. So when you sketch it, then you stay and you adhere to what you see. So this is just a small example, and you saw yesterday when we did the euro, you had a good point at 108.50, and though I did not have a layout, but then we end up confirming it. So this is a follow through on the same pair. Maybe I can make a little bit adjustments to it, probably, because this is just a rough sketch. But what I intend to do is try to connect this and get this one also on, but apparently it's not coming unless and until I do this. Leave it. So this is what I confirmed you, that indeed there's a support towards 108.50. So I still expect the price probably can make it to 109.55, 60. But then again, whenever you see a formation like that, that's mean this is one breakout trend line in play. This is another breakout trend line in play. So this is what you expect. I mean, this is something that you can I'll tell you how to use that in your trading also, depending on your style and nature of trader you are. But this is what you can do on that. That is, it will do nothing more than consolidate. It will do nothing more than consolidate. You know what I mean? Not till it breaks out, not till it breaks out. So whenever I see, to me, when price gets trapped between two breakout points, right? Yeah. And how would you know that it's a breakout point? If you look it carefully out here, it gives you a pattern like an X formation. You know what I mean? This is an X.
Yeah. Yes.
I actually, I don't know if others are seeing, they do it this way, but I actually have termed a name for that, and it was a time when I was posting and I was calling it by that name. I used to call it an X pattern. To me, when somebody asks me what is an X pattern, I'll tell them plain and simple, it's a congestion point. Price is trapped between two breakpoints, so it needs to break out. And normally it takes, this is where the trading gets very painful. That's mean it can just sway between these 2 points till you get a breakout. And breakout normally means you need to have a strong news impact. I've seen in some instances where it never breaks out of this, and the reason being, of course, this is just a 2 hours chart. But if you do the same thing on 8 hours or a daily, those points end up expanding to such a huge distance that they lose their charm. By losing the charm means, that where the price is, the top is probably coming 1,000 pips on the higher side. Where the price is, the bottom is coming maybe 1,000 pips on the lower side. I mean, you cannot trade that. So then when it start losing, initially it's good for maybe 1 day, like say 2 hour chart, maybe, if there's some strong moves, then, these are your point for sale, these are your point for buys. But as we drag on, right, maybe by NFP, this can still be an active chart. But if it drags on for, let's say, 3, 4, 5 days ahead, then I think it will lose its charm. Then of course we'll end up, getting something, something like this. I'm not saying it is doing it right now, but I would expect, because I'll get something like that and make it more refined, something like this, and this would make, because when the price is here and still here, then this is more gettable as compared to this thing. There's a difference of 100 pips, but as you proceed, it just keeps on, expanding and expanding. So sometimes you get a very good formation where starts off tight range and then expanding it, so you can play them for 2 or 3 days. You mainly use it for scalps, unless you're a strong bias on one direction, then it's a different story. So these are just an aspect of how you do it. And of course, I don't expect you to immediately grasp everything, but we'll be repeating this again and again, because they come into play again and again, and the more we discuss, the more we talk about it, the better understanding you have. But it's always a good exercise, always a good point when you are on the charts and when you are plotting it. If you can see some formation that's coming up like that, then it's always a good point to probably maintain a diary start, because for me it's different. I can have one look and I know what I need to do. But for you to start making it, you need to put that into diary, that these are the formation that if it comes in, I need to pay attention. And more than paying attention, you need to see when they come into play how they react. Because as of right now, your initial mentality be test, because we are on the live markets. We're not discussing anything which has been already happened. So whatever we're discussing, it will continue. Means within the close, since it's within the close proximity, so you can bet that they will come into play sooner or later, and you will get to see the reaction. And these are the points that you need to start sketching on your diary and see if you can spot the same thing, on some other pairs, on some other time frame. And this is what will actually refine you, get you better and better. Now, if you once you start practicing more and more, you'll get better more and more. So, unfortunately, we had a delay today. I will
Yeah.
stop the session here. I have few, I've got few things that I need to take care of,
Okay.
and I'll see you tomorrow. It'll be a good practice if you can send me across. As of right now, I don't want expect you to go on the externals and then things like that. But see if you can give me some good, very streamlined. Your chart should not contain more than 3 trend lines. And what I need is a support. What I need is a resistance. And if you can, optional, third line has a midpoint. What you think is a midpoint, but draw it manually and send it across to me, and I would like to have a look. And if you can do maybe 1 or 2 pairs on, send me 3 4 different charts, different time frame, I would really like to have a look on that.
Okay. I would do that. Thank you.
I'll see you tomorrow, and have a good and blessed day. Take care.
Yeah. Thank you. Bye.
Bye.